D.C. Hey, Nance.
Thanks, Carol. China says it will enact measures against U.S. entities related to the downing of that suspected Chinese spy balloon off the South Carolina coast. The Foreign Ministry spokesperson gave no details and did not identify the targets of the measures. China says the balloon was an unmanned weather airship that had flown off course. U.S. officials say it was conducting surveillance. Nikki Haley, the former UN ambassador, formally kicked off her presidential campaign in Charleston, South Carolina today after announcing yesterday on Twitter she would run against Donald Trump for the Republican nomination. Bloomberg's Irv Chapman has more from Washington.
She was introduced as America's version of Margaret Thatcher, and Haley described herself as tough as nails.
We must stop socialism before it's too late. America is not past our prime. It's just that our politicians are past there. Joe and Kamala even say America's racist. America is not a racist country.
Haley referred to China as the strongest and most disciplined enemy in history, and she promised the Chinese Communist Party will end up in the dustbin of history. In Washington, Irv Chapman, Bloomberg Radio.
Florida Congressman Matt Gaetz says the Justice Department has informed him he will not be criminally charged in an investigation of potential sex trafficking. The news comes despite his former friend Joel Greenberg cooperating with investigators. Greenberg was given more than a decade in prison for charges that included sex trafficking a minor. A hero's welcome today for Super Bowl champs, the Kansas City Chiefs. Fans turned out for a rally at the city's Union Station. The Chiefs defeated the Philadelphia Eagles to win their second Super Bowl championship in 4 NFL seasons. Even schools were canceled today so the kids could go see the parade. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Madison.
All right, Nancy, thank you so much. Bloomberg Business Week, it is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. There is still time to claim the employee retention credit, unlike the PPP. The ERC is not a loan. Business owners can use the ERC to expand their company, pay off debts, or hire new talent. The money is there to help your business as you see fit. For more information, head to getrefunds.com.
And as we know, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for Wednesday, February 15th, here is Bloomberg's Justin Milliner. Hey, Justin.
Hey, Maddie, thank you very much. On this day in Black history in 1968, Henry Lewis was named conductor and musical director of the New Jersey Symphony Orchestra. That made him the very first Black person in the United States to lead a major symphony. Mr. Lewis was born in 1932. He was a musical prodigy. He joined the LA Philharmonic back in 1948, becoming the first Black instrumentalist in a major symphony orchestra at just 16 years old. He went on to become associate conductor of that group before moving on to run the New Jersey Symphony Orchestra. It was already a nationally recognized group, but Henry Lewis helped them to grow to greater heights. It was during this time that they made their first appearance at Carnegie Hall, and they performed at the Kennedy Center during the venue's first season. Some of his other accomplishments include being the first Black person to conduct at the Metropolitan Opera in New York, and he went on to conduct and record with the Radio Symphony Orchestra in the Netherlands, and that is today in Black history.
All right, Justin, thank you so much. Really appreciate it. All right. Maddie, you ready to talk about the markets?
Oh, I'm ready. I'm excited. It looks like we're seeing some correction from earlier declines.
Kind of rolling over here, right? On the equity market.
Bit.
Yeah, still a little bit higher on the NASDAQ, just up about 0.5%. But as we heard from Creedy earlier, really just some moves once again in the Treasury trade. That 10-year note with a yield of 3.80, and you've got that 2-year note with a yield of 4.62. So we're going to talk all about it with our TV colleagues. That's because Countdown to the Close on radio, TV, YouTube, and Bloomberg Originals starts right now.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. About 60 minutes left to go here in the trading session. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Carol Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, radio, as well as for those folks streaming on YouTube. Carol Massar, we talk about a market that was so lasered in here on a couple of key data points, the CPI data yesterday and the retail sales numbers today. Those have come and gone, and now we're seeing the market reaction, and it's a little bit mixed here. It seems like some people think that this maybe is all clear, and other people saying, well, the Fed's going to be in the way.
Yeah, we have a good debate continuing here.
Right? You like economic growth, don't you?
I love economic growth, you know, but I'd like
I didn't know
prices
if
to
you were
come
one
down.
of those contrarians. Somehow things-
No landing, soft landing. I don't know. Hey, listen, one thing I noticed,
Bad means good.
there's 3 women against 1 guy. I'm just going to tell you, Romaine, you better watch it. All right, let's talk about, speaking of what I'm watching is the semiconductor sector. There was a slew of news, so let's bring it up for everybody on TV and on Bloomberg Originals and YouTube. Stocks is pretty much little changed here, but Taiwan Semiconductor, that stock is down about 5.5%. You know, you had the 13F filings, hedge funds, a lot of them piling into Taiwan Semi last quarter, but this was happening just as Warren Buffett sold 86% of his short-term stake, cutting it just after months that he disclosed he had that $5 billion stake. So TSM certainly under pressure. And I wanted to bring up Intel too. It's flat right now. We've got a story on the Bloomberg about how Wall Street is bracing for Intel to cut its record dividend. So it's just something we're keeping an eye on, Maddie.
Something we're keeping an eye on also regarding those retail numbers from this morning. And those consumer floodgates are just ripping open. As we know, all 13 retail sales categories rose last month. But take a look at this chart. Spending at restaurants and bars rose 7.2%. That's the most since March of 2021. This data point is the main proxy for services in the retail sales report. So this is critical data when we're looking at as we try to kind of cling to any signs of disinflation on the good side. This figure is just showing that stickiness of demand for services.
The persistence that we continue to see on the services side definitely seems to be the ammunition for the Fed to remain hawkish here. The balance right now between the economic growth, the resiliency of that spending, and the reaction function by the Fed. Unchanged right now on the S&P 500, down 0.2% on the Dow. The NASDAQ up about 0.5%, and some of the cyclical and small cap names out in front here on the day, up about 8 to 0.9% on the Russell 2000.
And I'm looking at the sector performers here in the S&P 500. Energy off by more than 2% as oil prices fall. Energy, actually among the 11 industry groups, has the smallest gain of all the sectors that are still up for the year. And you know, remember, the S&P 500 is higher for the year. So that's pretty notable given that it was the best performing group last year. And a lot of people still say there's a lot of value to be found in those energy companies.
Well, we'll see if they actually look for it here. Of course, there is still some economic concerns. One reason why you see the drop in energy prices. And of course, EIA data that we got a little bit earlier, this showed one of the biggest jump in stockpiles that we've had, I think going back all the way to June of 2021. So definitely some concerns that maybe the demand isn't there. Pioneer Natural, among some of the big energy names that are moving lower here on the day, they're down 5%. Meanwhile, you have Comstock, which is actually up 4%, natural gas producer, and that's largely because of some cost cutting that we're learning on the Bloomberg terminal today. So maybe the reaction there is what's making them the outlier here on the day. Meanwhile, you go back to the top of the screen here. Any concerns here about a potential slowdown in digital ad spending that might have been put to rest by the report that we got out of Trade Desk earlier today. Those shares up 27%. The company not only had a great quarter, but standing by its forecast for the full year, both in terms of revenue as well as on EPS. So some people think that maybe the sell-off that we saw in that ad space was a little bit too much. Similar story for Silvergate Capital, which of course had a massive sell-off. Those shares, which of course were up in the double digits yesterday, rising another 23% here on this day. And Carol, of course, we then go back, of course, to the big number. Maddie was just talking about it, that retail sales number. You see the aggregate change there on your screen right now. That is resiliency, Carol Master, up 3%.
Yeah,
Tell me otherwise.
It's unbelievable, right? Interesting to see everybody kind of out in full force in January spending, and it was really broad-based in terms of the expenditures that we saw from consumers. Having said that, our David Weston caught up with Brian Deese earlier on Bloomberg Radio and Bloomberg TV. Of course, the president's top economic advisor, though stepping away, as we know, Lil Brainerd will take his spot. But David asked him about inflation coming down and if we can continue to see the pace of declines continuing. Check it out.
As you move down, certainly you're less likely to see the kind of deceleration in the inflation numbers persist indefinitely. But, you know, then again, we also know that, for example, you know, on the housing side, we are very likely to see an increase in sequential cooling as well.
Of course, Brian Deese getting ready for his farewell party at the White House, director of the National Economic Council at the White House. But there are, Scarlett, those sticky issues, whether it's housing. There are things that are going to be persistent when it comes to inflation. And especially if we continue to see some economic growth, you do wonder whether or not we see more pressures creep back into pricing throughout the economy.
Right. It's retail sales, it's housing with that bigger than expected gain in February. It's also manufacturing. The New York manufacturing report was a negative print, but much better than expected and a considerable improvement over the previous month's big negative print of negative 32.9. So you put it all together, and this looks like an economy that's doing very, very well. It doesn't show any signs of perhaps meeting the Fed's forecast of growth for just this quarter. There was a note from Neil Dutta, in fact, saying that he sees the economy achieving in the first quarter what the Fed has forecast for the full year.
It's what our macro man said this morning. He said it best. This retail sales figure is the latest one alongside the payrolls data, Scar, that is just added to the laundry list of things that we didn't expect to see after a 400 bips hike from the Federal Reserve this year. I didn't have this on my bingo card following all of those rate hikes.
Yeah, I mean, I guess so, yeah. But when we have to look a little bit longer out here, right? I mean, what's the concern then? I mean, you would think that when you get a report like this, under normal circumstances, you would see probably a little bit stronger of a rally, right? So is the idea here that whatever people thought the Fed could potentially do with regards to maybe pausing or reversing course here, that might be off the table, or at least there's no reason for the Fed to put it on the table? Yeah,
it's confusion. It's confusion over what happens next and what the data will now show. And the perception that people had of the trajectory of the economy is unknowable at the moment, and the Fed knows that too.
The timing is tricky, right? And each data point certainly is really important in terms of figuring out policy going forward. All right, guys, that's a wrap. We're going to be back in less than an hour's time. Some earnings coming after the closing bell as well, but we'll come back on radio, TV, on Bloomberg Originals, and on YouTube. Beyond the Bell, join us at 4 p.m. Wall Street time. So it's kind of interesting, Maddie. We were breaking down Airbnb earnings after the closing bell, and the stock just shot off in the after hours. It is, I think, the #1 gainer in the NASDAQ 100. So despite kind of the mellow feel in the equity market, the malaise, if you will, as investors try to figure out what the Fed's going to do, when it comes to something like Airbnb, it's off and running.
It's running, and it doesn't appear to be stopping anytime soon, which I find fascinating because I don't know about you, Carol, but I feel like my friend group has moved towards a hotel vibe in our era of life that we're entering. So I'm fascinated by Airbnb's continued success.
All right, so let's get to it because Airbnb is just soaring up, I think, about 14%, as we said. This is after the company came out. Their quarterly update included a record year in 2022, marking its first full year as of profit, and also gave an outlook showing robust travel demand. So let's get to it. In our studio, Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh joining us here, as we said, in studio. So let's get to it. An amazing quarter? How do you describe it?
Well, one thing is the macro is working in their favor, and when you look at consumer spending, they are spending on restaurants, they're spending on travel, and Airbnb is one of the biggest beneficiaries of that travel spend. So look at what they have done since the pandemic. They have actually doubled their revenue since 2019. You look at all the other players, hotels, online travel players like Booking, Expedia, they're back to where they were in 2019. That's the main difference, that this company actually was a share gainer in terms of the overall travel spend. They created this category for alternative accommodations. Right. And they remain a category leader, even though Expedia has Vrbo, Booking has added some inventory, but they have 6.6 million listings, and supply is always an advantage when you think about marketplaces.
Mandeep, that's what I was thinking about. I mean, we always say, okay, when somebody reports, are they back to pre-pandemic level? You're saying the other guys, yes, these guys are doing even better than pre-pandemic.
Yes, and double their revenue, and look, they're still growing faster than the other guys. I do worry about the comps because that type of growth is not going to repeat in the next 3 years. So clearly, comps are much tougher. They did get a boost during pandemic because everyone wanted to be away. They didn't want to socialize, and
the work from home factor is huge for Airbnb,
long duration nights was such a big step up of their overall bookings. They're actually doing 21% of their bookings are long duration nights, which means people are traveling more than 30 days for a lot of these bookings.
And is that just that whole idea of people working not in the office and still working elsewhere? Is that what that is?
That was what drove that bump. I think going forward, they'll find it challenging to maintain that same pace because of, people coming back. I still think remote work will remain a tailwind because we are not going back to where we were prior to the pandemic. But still, I think you have to think of the overall growth rate, and that's where the room nights sort of decelerated, but the ADRs, average daily rates, are off the charts. I mean, you compare them to pre-pandemic levels, this company has gained so much share in terms of average daily rates.
Right.
It's close to where the premium hotels are. And I think that's where you kind of factor in what they will do internationally going forward, because a lot of the growth in the last couple of years was domestic in the US. Now they're talking about China, outbound travel being that next growth driver. And really, people have realized that this is a viable alternative for booking your travel. It gives you a great experience if you're even traveling in a big group.
Right.
That wasn't the case before.
It does give you that good experience, but I have to play the devil's advocate here because of those.
You're a
pesky
hotel
fees.
person, is that? Oh no,
It's just those fees, the big cleaning fee. Like there have been SNL skits about this, right? So what is Airbnb doing to address those pesky fees?
So again, that's where a marketplace comes into play. Marketplaces are just listings. They're involved in adding the host and charging the fees. And doing some basic work to keep that supply onboarded. But at the end of the day, they are really the scale players where every host wants to list their property. Yeah. And consumers come to their platform because they find the widest selection. Now, where else would you go? Because nobody else can replicate the 6.6 million listings. So they can charge those kind of, cleaning fees, take rates, because there is no choice.
They can get away with it.
If you're a host, where else would you list your property? And that's why scale matters so much for the marketplace. Like you're not going to go elsewhere. When people think about alternative accommodations, they think about Airbnb it. Yeah.
There's nobody else who can kind of, whether it's through consolidation or, sometimes we see it in various sectors where the little guy, maybe not the first one out there, but can play catch up. Nobody out there?
I would say it's a very consolidated market. There are three main players among online travel players. It's Airbnb, Expedia, and Booking.
Yeah.
Expedia and Booking obviously specialize in hotels more, and they're trying to build their listings on the alternative accommodation side. The only risk for Airbnb is the market may be saturating in a couple of years, because you have to ask yourself, if the adult population is 150 million in the US,
right,
how many of those are going to want to use, alternative accommodations? I think the market for hotels will always be bigger.
You mean as people get older? Is that what you're thinking,
and
or
there's
what?
some people, like their core demographic is 18 to 34-year-olds.
Yeah.
And they have a very high repeat rate. So they've, penetrated the market very well. Question is, can they expand beyond the 35 to that demographic? And that remains to be seen. No one knows that.
I wonder too about that demographic using Airbnbs as their main home, because rent is so high. I know of people who have found it easier to live month to month in Airbnbs across the US because it's cheaper than living in New York City.
Seriously?
Are we seeing that in the data? Oh yeah, seriously. Yeah.
Wow.
I mean, inflation has helped their average daily rates. I mentioned about that, how high they've gone, because you can pass on the, the higher inflation to the rents. You don't,
it's cheaper to live in Bali for a month than to live in New York City in an Airbnb, right?
And that's where you can actually curtail it depending on what your pocket allows. You can go for, the high end, or you can go for the low end. Yeah. And you have that selection available on a marketplace. So clearly scale is what drives this business. And as long as they keep adding supply, they talked about boosting supply by 16% in the latest quarter. Marketplaces always match supply and demand, and your top line growth will be equal to your supply growth in the long term. In the near, 1 or 2 quarters, it may vary, but in the long term, it will always be equal to your supply.
Are they running out of properties or no?
Not yet. So they talk about how they focus more on the individual host compared to property managers who have a lot of rooms or condos. And that is their selling point because it gives them something unique. Yeah. Now, the question is, can Expedia and Booking get those individual hosts on their platform? I don't think they are after those individual hosts because that's a lot of work, and there is that network effects. Like, the hosts are the people who have used Airbnb in the past as a customer. So they're able to convert the customers into hosts, and that's a flywheel. It's hard to replicate if you are trying to build a new marketplace.
But also, sometimes customers can then get the contact of their Airbnb host and then just book it directly through the host.
Does that happen a lot?
Are you going to trust someone to come and stay in your home without there
I'm not
being
going
a
to say
middleman?
I've done it. I'm just going to say I know that it's happened, right?
Growth. You mentioned international. So is that right now? I'm looking at 2021 revenues, and it looks like a pretty even split between the U.S. and international. Is that the growth though trajectory?
It used to be 60% international. So pandemic, it was more skewed towards U.S. I do think China outbound travel is the big driver to watch for 2023. And beyond that, their average daily rates will go down because, you know, the inventories outside are not going to be as high priced as the ones in the U.S. But look, for growth, and if you're trying to build that flywheel where you have more listings, more supply growth, they have to expand internationally, and they'll pretty much be out there everywhere, Europe, Asia Pacific.
Emily Chang sitting down with the company's CEO, Brian Chesky, a little bit later on, about a couple hours, or about an hour or so. What would be your number one question for him?
Does he want to expand the Airbnb experience to include complete travel, whether it's flight bookings, car rentals, because that's what the other OTAs do, and that's not higher margin. Margins are highest in that hotel and the alternative accommodations. But when you're booking travel, why would you use multiple platforms? You want a one-stop shop to do everything.
Do you think that's a good idea for Airbnb? Sometimes I feel like it gets messy on the platforms, but I don't know.
Well, you want to bundle your travel.
Yeah.
Why do I have to use 2 or 3 websites or apps to do it? When I need to fly somewhere, I need to book my car, and I can Uber it, but I want that one place where I can do it.
Just put it all together.
Yeah.
And they already have, do you see signs of that through the experience kind of platform that Airbnb offers? You can kind of book like a cabin stay.
Yeah, but it's a very small portion of their business. And right now, all the revenue is driven off of the accommodations business. So clearly, they can put a lot more weight behind it if they wanted to.
And do you use Airbnb a lot?
Not a lot, but I have used it, and it's been great so far. And the other thing is ratings. They have ratings for a lot of hosts, and that's very valuable data because suddenly you kind of feel good about using it if you see 50+ ratings. So that rating data is hard to replicate.
All right, good stuff. Great deep dive about one of the standout performers in terms of the equity market today. Mandeep Singh, thank you so much. Senior tech industry analyst at Bloomberg Intelligence via Zoom from New Jersey. Did you live in an Airbnb during the pandemic at all?
I did not. No. I've never been a long-term stayer.
Did you ever do? But you've stayed, right?
Of course. Who hasn't? Right?
It's a brilliant model.
Yeah,
I think it's really kind of fascinating. And we are going to hear from the company's CEO Brian Chesky. Emily Chang going to sit down with him a little bit later on. All right, you are listening and watching Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check the markets all day long at Bloomberg. A choppy session. We have got the Dow, the S&P lower. Little change, truth be told, on the S&P right now. We have got NASDAQ advancing, but let's find out what's happening with the markets. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks mixed in another choppy session. The Dow is currently down 46 points. S&Ps are little changed. NASDAQ is higher by 66. The U.S. 10-year yield at 3.81%. Gold is down 19, oil trading in the red. But Bitcoin is surging up 7%. Among the main 11 S&P sectors, leaders were telecom and consumer discretionary. Energy was under pressure. And leaders to the upside in the Dow, Caterpillar and Apple, while J&J and Chevron led to the downside. After earnings, Airbnb rose 14%. Biogen fell 4.5%. And in other news, Ford extends the shutdown of the electric F-150 Lightning production. And wrapping things up, some of the names reporting after the bell tonight include AIG, Roku, Twilio, and Zillow. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we want to get to a story because it does feel like, Maddie, that everybody's heading down south.
They've got to. I mean, with the winter, you got to do it,
This is an easy winter.
This is a very easy winter, but I'll always take an excuse to go back south to Florida.
So let's talk about it because there's a great story on the Bloomberg because as a result of it, specifically in a state like Florida, it's leading to record-breaking home sales in the Sunshine State. So let's get to it with Bloomberg News Senior U.S. Economy Team Editor Alex Tanzi, joining us from our Washington, D.C. Bureau. He's on Zoom. Alex, good to have you here with us. So I feel like people have always been heading south. We always talk about retirees or going after lower taxes. What specifically, though, is going on now and what makes it stand out?
The valuations are just going crazy. So people have always headed to Florida, but usually Florida real estate was a little less expensive. Now the prices are really impressive, and they're country leading at this point.
It's so interesting to me because I'm from Palm Beach County, so I'm a little bit biased here, but I've always been used to people heading down to Florida for the winter, like we said, but not necessarily moving there. Obviously, we saw the huge flight of people moving down to Florida during the pandemic. What is it, Alex, that's making that sticky? What is it about Florida that's really drawing people to continue to move down there, even as pandemic restrictions ease across the rest of the U.S.?
Well, for one thing, I think a lot of cities are having trouble retaining that stickiness. So places like Washington, D.C., when I come into work in the morning, it's still pretty empty. A lot of retail is closed, so it's just not as enticing as it used to be. And the same could probably be said for parts of New York or San Francisco. Meanwhile, Florida always has the nice weather. There's reasons that people want to be down there.
All right, Alex, let's get to it. It's like it's watching an episode of $1 Million Listing. Yes. I want to know the specifics. Tell us about what's going on and why is Florida, some of the priciest neighborhoods are home to some of the priciest neighborhoods in the country.
So there's these 6 islands off the coast of Miami, and Ken Griffin decided to move to one of them, and he bought 5 properties there. So he spent close to $200 million on these properties, and that really elevated the value of the remaining homes on that island. So they've gone to an average of $40 million per house. 3 years ago, they were 23. So if you had one of these houses, you made an easy $17 million in 3 years. And it's like that across from Miami to Palm Beach, and even parts of Florida that were traditionally more quiet. They didn't have the same type of wealth, like Tampa. Now there's a handful of zip codes in Tampa where the average home price is more than $1 million.
Do you think if we hadn't had the pandemic, Alex, we would be having this conversation?
Definitely not. You know, a lot of people, I mean, Florida is a great place to retire, and people would sell their house in New England or somewhere else, make some money off it, and then they could go down and buy a cheaper place in Florida. That's no longer the case. So the pandemic really upended the entire real estate market. Not just in Florida, but across the country.
Yeah.
I wonder if inflation plays into it too, though, Carol and Alex as well, because you mentioned Tampa, where inflation hasn't been as bad as the rest of the state. Do you think that that is a draw for home buyers as well?
Not really. You know, real estate's on its own trajectory, and you know, rents have gone crazy in Tampa, but I think the home valuations are on a different trajectory.
Now, what about something like a California? I mean, I still feel like they have some of the wealthiest neighborhoods or richest neighborhoods. Is that fair still, and that still exists?
That's fair, because they start at such a high level. There's so much wealth in California, and there's a massive amount of real estate wealth in California. But if you look at it, by neighborhood, there's lots of neighborhoods in San Francisco where if you had one of these very expensive houses, you lost value over the last 3 years. So while parts of Florida are zooming in price, your house is actually losing value. But that said, you know, there's very, very rich neighborhoods in California still, and in particularly around San Jose and San Francisco.
Right, Beverly Hills pretty top on that list. Maybe not number one, but close up there.
Close up there. And when we bring up California in comparison to Florida, of course, my mind goes to politics, right? And you mentioned Ken Griffin. He is a donor to the DeSantis campaign, DeSantis being the governor of Florida. Alex, I wonder if there are any political ramifications that impact home buyers in terms of where they decide to go. Do you see some of the political moves that have come out of Florida in the past couple of years impacting home buyers' decisions, or not so much?
Well, people thought that all these moves to Florida was going to make the state more purple, but instead the reverse has happened. It's probably become more red. So I'm not sure if the people moving tend to be more right-leaning to begin with, but we haven't seen Florida become more purple. And all these moves are having a very long-term effect. So Florida gained congressional seats in the last election. New York and California lost seats. It's still very early, but the next census is in 2030. It looks like the same thing's going to happen. Florida's going to gain some seats. Other parts of the country are going to lose seats. So over time, Florida's could gain more and more power, not just in wealth, but in kind of politics as well.
Yeah, and it's such a critical point. I remember when I was in Miami covering the midterms, that area is a Democratic bastion and has been for decades, and immediately flipped to DeSantis this time around. So really interesting to see the changing political landscape there. But also another comparison to California, the millionaire tax, which is coming up in California. Is something like that going to be a key driver to home buyers to go to a state like Florida instead if they were weighing their options between the two states?
That's a huge factor. We quoted someone from, said he had clients from Massachusetts, and I think they just passed the tax, or they're about to. And if you're going from a state where you're being penalized for, you know, earning a lot of money to a state where there's no income tax, I mean, it's a major difference. And I can tell you, I have a brother that lives outside of Boston, and he said lots of his friends in his neighborhood are looking to make the move, or at least buy a place and then, you know, spend half the year there.
It's real. It's real. Hey, just going back to one stat in your story, Florida home to 38 of the $50 billion U.S. neighborhoods with the largest price gains by percentage over the past 3 years. This is based on Zillow data. Those areas have all seen home values more than double. So based on this conversation of what you're saying and the people you talk to, Alex, for this story, does this continue?
I don't know if it continues, because the prices in Florida are no longer cheap. So at one point you could sell your house in, you know, outside of New York and Westchester or something, and move down to Florida and buy a cheap place, but that's no longer the case. So it makes it much harder to to see it continuing to the same degree. I mean, we have some real estate agents quoted in the story that, see no end in sight forever, but I have my doubts.
It's crazy to see these prices continuing to go up. This time next year, Alex, what expensive area in the country are we going to be talking about? Still Florida or somewhere else?
It's hard to say. It's really hard to say. But one thing that we didn't get into in the story, if you moved in late 2020, so after the pandemic hit, you could have bought a place in Florida for less than $300,000 in a nice neighborhood, and they're worth $750 today. But there are neighborhoods that were $350 back then; they're worth $900 today.
That's amazing.
So, and it's not like you paid $300 back then. You put maybe 20% down. So, if you put $60,000 down, you'd be sitting on something like $600,000 in equity. The gains are just unreal.
Well, great story, a lot of information, and I highly recommend people check it out at Bloomberg.com or on the Bloomberg terminal, because it also talks about some of the neighborhoods in New York, whether it's Washington Heights, whether it's the Upper East Side. Get an idea of what we've been seeing in pricing in comparison, because we think about New York and the wealthy neighborhoods that are here, but there's definitely been a change.
A bit of change across the whole country. I got to remember to not just think about my own rent issues here.
All right, Alex Tansey at Bloomberg News. Let's get another update on world and national news. Off to Nancy Lyons. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. President Biden is outlining his plan to reduce the deficit while investing in America. Things like increasing the tax on billionaires. And during an appearance in Maryland this afternoon, he called out Republicans for a plan he says will increase the deficit.
To say you want to reduce the deficit, but their plans are going to increase the deficit by $3 trillion based on what they introduced so far. So where are they going to cut? They're going to cut Medicaid, the Affordable Care Act, they're going to cut Social Security or Medicare, veterans benefits, aid to farmers.
Just today, the Congressional Budget Office released its estimates for the budget deficit and says it's now seen to be $426 billion worse than projected last May. It's now projected to be $1.41 trillion. A white supremacist will spend life in prison without parole for the hate-motivated terror killings of 10 black people in Buffalo. Inside the Erie County Courthouse this morning, the sentencing hearing for the shooter at the Buffalo supermarket included statements from victims' families. One of them, Simone Crawley, the granddaughter of victim Ruth Whitfield, addressed the killer directly, saying they will pity him as he spends the rest of his life behind bars.
You will simply go from a name to a number. You will be herded like cattle. You will be shut away from the world. You will not enjoy family events. You will not enjoy outings with friends. You will be nameless and faceless.
The sentencing hearing was disrupted briefly after a member of the audience rushed the killer and he had to be removed from the courtroom. China warned today it will retaliate against the U.S. over violations of its sovereignty, potentially escalating a lingering dispute just as both nations' foreign ministers plan to attend a security conference in Germany. China's foreign ministry spokesman claims the Chinese balloon was doing weather checks. Global news 24 hours a day, powered by more than 2,700 journalists.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. I'm Charlie Pellet. We check markets all day long at Bloomberg. We've got just about 19 minutes to go ahead of the closing bell. U.S. stocks are trading mixed. Little changed on the Dow right now. Little changed on the S&P. And NASDAQ advancing by 0.7%. Treasuries mostly lower as investors hone in on another batch of solid economic data, even as worries mount that it will force a hawkish response from the Federal Reserve. Right now, we have got the S&P up 0.1% higher by 4 points. The Dow down less than 0.1%, a drop there of just about 10 points, while NASDAQ up 73, higher by 0.6%. The 10-year yield 3.80% right now on the 10-year. The 2 years yielding 4.62%. Spot gold down 0.9%, 18.36 the ounce. West Texas Intermediate crude down 0.5, 78.66 a barrel. And Bitcoin now rallying 8% above 24,000 at 24,035 on Bitcoin. Retail sales rose in January by the most in nearly 2 years, signaling robust consumer demand that could bolster the Federal Reserve's resolve to keep raising rates in the face of persistent inflation. Margie Patel is Senior Portfolio Manager at Allspring Global Investments.
As we can see, the economy is still pretty resilient. Consumers are in good shape. Unemployment is still very low. So it doesn't look like over the short term we've had a lot of immediate effect, that huge increase in short rates that they've made. So that says to me it may take the Fed a little bit longer, and it may take much longer to get to that promised land of 2% inflation, which they're hoping to hit sometime next year.
And this update is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It's simple and easy to see if you qualify. Learn more at getrefunds.com. After earnings, Airbnb shares, they are surging now by 14.1%. And health advisors are preparing to consider whether Emergent Biosolutions opioid overdose reversal drug is safe to sell without a prescription. We've got that stock rallying now by 12%. Briefly, Raquel Welch, 1960s film star, has died at the age of 82. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it's time for the drive to the close with Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute. That is a subsidiary of Wells Fargo Bank, which serves Wells Fargo Wealth and Investment Management clients. He joins us via Zoom in Charlotte, North Carolina. Samir, thanks so much for being here with Carol and I today. We've got a hot labor market, hot retail numbers, and the hot CPI yesterday. Where does inflation go from here? And can you kindly give me like a magical date I can expect to have some more affordable groceries? When is this going to start to come down a little bit?
Well, if you at least track one-year inflation expectations, I think, look, we bottomed kind of that 1.6, 1.7 range, and they're all the way back to knocking on the door of 3%. So you're going to have to hold off a little bit on those cheaper groceries. And I think, what we're all learning is that, look, 5% is not, restricted, right? It's probably close to neutral, especially with growth and inflation running at the levels that they are. So now the Fed has a decision to make. Do they somehow try and play for time, or do they go further? And keep in mind that the Fed has already made the mistake once of calling inflation transitory. Now, they have to figure out whether disinflation is transitory, and it's appearing to be as such. And so, unfortunately, I think for markets anyways, the rates markets are kind of telling you this answer already, is that we're going to have to go further. We're going to have to stay there higher, and it's probably not good for growth stocks.
All right. So But what's interesting, as you know, Samir, that we've seen on days where there is talk about the Fed going higher or staying higher for longer, and yet we've seen a rally in some of those tech names, which kind of goes against the historical thought about that. So having said that, does growth or ultimately no recession or a soft landing still make growth an interesting area for investing?
Well, unfortunately, I think the market will eventually come around to the realization that you have to pick one. You can either have a soft landing and inflation running north of 2%, or you can have 2% inflation, and that path, unfortunately, leads to a recession. So the market has kind of been combining a soft landing or no landing with 2% inflation. We just don't believe that's a realistic scenario. And so our base case calls for a recession, calls for 2% inflation. Now, again, it could be that takes a little bit longer than we initially anticipated, but unfortunately, it probably still ends the same way, which is with growth underperforming and those value areas, kind of leading us out in the next bull market.
So you still see a recession, but we're seeing such strong consumer spending, and I have trouble squaring those two.
And strong job market.
And strong job market. I wonder do we anticipate that the consumer is spending ahead of a potential recession? How do you square that?
Yeah, I mean, look, unfortunately, consumers are almost always the last ones to figure it out, right? I mean, when you look at consumer credit outstanding, it's already dipping by some pretty big numbers. When you look at the last Fed Senior Loan Officer survey, they're tightening, those lending standards to lend to consumers at a pretty fast clip. So unfortunately, a lot of people won't figure it out until it's probably too late, and that's probably the middle part of this year.
All right, so having said that, so it sounds like you're not onto growth, you're thinking about value. Where specifically when it comes to the value world?
So the two areas we like most right now would be energy and healthcare. They've both kind of been left behind in this most recent rally, especially with energy prices on the commodity side having come down recently. We think that the China reopening story was a little bit oversubscribed in the last, few months. We think there's, unfortunately some bumps along the way with respect to reopening. But as the temperatures there start to warm up, we do think that those Chinese consumers will make it out of their homes. And we think that will drive the commodity prices higher, which will take the sector with it. The other area that we really like, it's a little bit of a defensive, it's a little bit of a dividend play, but we like healthcare. A lot of the pharmaceutical names have not participated recently, and they have some very healthy levels of income, especially when compared to what you're seeing on the rate side.
Yeah, if you take a look at the 11 major industry groups in the S&P 500, healthcare is second from the bottom, down about 3% so far this year. Energy is fourth from the bottom with about a 0.4% gain. But, Samir, we know energy has been on a tear the last couple of years. But the point is what? The basic supply, demand fundamentals, the basic thought that fossil fuels will still be around for decades. I mean, that plays into the energy equity play.
That's exactly it. And honestly, even in kind of that supply-demand balance, probably the real key is supply. When you look at what's going on with OPEC, when you look at what energy companies are telling you with respect to how much they're going to produce, they're all talking about rewarding shareholders at the expense of keeping a very tight hold on production.
Do you think that stays true even with some of the earnings reports that we've heard this week from companies like Chevron saying that we're going to have to up production at a cost to us and not necessarily be able to get that return to investors?
We'll believe it when we see it. Unfortunately, there's still a lot of activism in that sector, and it could be that if a lot of these CEOs start to kind of step out of balance and do start to, one of those, kind of old mantras of, you give an oil man $1 and they go drill a well. I think if that behavior does come back, I think you will have some activists start to get pretty persnickety pretty quickly.
U.S. versus overseas, what do you like?
So right now we would favor the U.S., but as the dollar climbs, keep in mind that that does make international investments a little bit more attractive. And what I mean by that is we think eventually the dollar probably does kind of roll over. Now, it may take a year or so as we kind of get through this inflation issue in the U.S., but the dollar should roll over because of budget deficits, trade deficits, what have you. And so as the dollar climbs, the international side starts to become a lot more attractive to us.
Just real quickly, Samir, does that international include emerging markets?
No, we would make a distinction there. So when I'm talking international, I'm thinking international developed, high-quality companies in Europe and Japan. Emerging markets is a little bit of a mixed bag right now with respect to China, the geopolitics, having such big weightings to Chinese tech. That's an area that we want to kind of stay cautious on, and we'd much rather play emerging markets through the developed market avenue.
All right, going to leave it on that note. Samir, thank you so much. Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute, joining us via Zoom from Charlotte, North Carolina. He talked about the dollar. Dollar index up a little bit today. We've seen it been trending higher over the last few days, but it is still down about 9% from late September of last year. But it plays into what we were talking about earlier with Creedy, because especially your multinationals, right? The higher dollar is problematic.
Right. But looking better in comparison to the euro?
Yeah, right. Exactly. You guys talked about it. All right, this is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Ford shares down 0.6%. Ford Motor is extending the shutdown at its plant that makes the F-150 Lightning plug-in pickup truck through the end of next week, at least. It says it is likely to determine the cause of the battery issue that idled production. Again, Ford shares, they're trading lower right now, down by 0.6%. Airbnb shares surging the most since 2021 after the company's sales outlook beat analyst estimates, signaling robust travel demand following a record year in 2021. Mandeep Singh is senior tech analyst with Bloomberg Intelligence.
I think when you look at the execution in terms of coming out of the pandemic, they were strong during the pandemic, but coming out, they look even stronger. So the top line growth as well as operating leverage actually stands out from all the marketplace peers. I mean, we talked about Uber and Lyft last week, how they're looking to show operating leverage. In the case of Airbnb, I mean, this company has 25% plus EBITDA margins, and at the scale that they're operating exciting. I think this is probably the best looking marketplace business out there right now.
And again, Airbnb shares up now by 13.2%. By the way, coming up at 4:40 Wall Street time, we will be talking with CEO Brian Chesky. Barrick Gold looking to reverse a slump in its bullion output this year after posting its lowest production in more than 2 decades. Barrick shares, they are down now by roughly 4%. Mixed day on Wall Street, and those are some of the company stories we're following. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Masser along with Madison Mills. She is in for Tim while he is on leave. And shortly we're going to head over to our TV colleagues, talk a little bit about the trade. We've got some earnings coming up after the close as well. In the meantime, a story crossed the Bloomberg within the last hour, and it has to do with the big tech sector.
Yes, it does. Apple, Meta, Amazon, Microsoft CEOs subpoenaed by a House panel. That is Jim Jordan, who is the House Judiciary Committee chair. Let me get my words out. Calling for those CEOs to come to Washington, specifically this time to talk a little bit about content moderation, which we're sensing from our reporters. I asked Greg Storr to confirm this for me, is citing discriminating against conservative viewpoints. That's the kind of nail in the coffin that Jim Jordan is trying to get out of these tech CEOs.
Yeah, more specifically, and I'm just looking through our story that Anna Edgerton put out on the Bloomberg, the House Judiciary Committee seeking, quote, documents and communications relating to the federal government's reported collusion with big tech to suppress free speech. Again, according to a statement just put out today. So it's interesting, right? We talk a lot about content, right, on all of these platforms. I know it's something that you cover a lot and talk about a lot, and it'll be interesting to see what goes on in the conversations. And, you know, ultimately, it's that free speech argument.
Yeah.
Is there moderation? You know, how do you, have some oversight of stuff that maybe shouldn't be on the platform, many would argue?
Yeah, and what does regulation look like when these tech platforms are changing at such a rapid pace? We were talking with Greg yesterday on the show about some of the sound bites that you get out of Congress when they're talking about tech and social media and maybe not necessarily understanding the entirety of social media platforms themselves. I should mention the Supreme Court has asked the Biden administration for input on Florida and Texas laws that would also sharply restrict the editorial discretion of those social media platforms. So this is a huge conversation, lots of different directions that it could go in with the Supreme Court and with Congress.
It should be pretty heated. The Judiciary Chair, we're talking about Mr. Jordan. He has been an outspoken critic of U.S. technology companies, also chairs a select House subcommittee on the weaponization of the federal government. So it'll be interesting, and I'm sure we'll be covering it here at Bloomberg and just kind of watching some of the interactions, some of the reaction, if you will, and keeping an eye on share prices as well. All right, everybody, you are listening and watching Bloomberg Business Week with Carol Masser and Maddie Mills. We're going to head over to our TV colleagues, talk about the trade. That's because Beyond the Bell, our cross-platform coverage on the markets, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic, Scarlett Fu, counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast, joined right now by Madison Mills, filling in for Tim Stenivek, as well as Carol Masser. Welcome to our audiences across Bloomberg Television, radio, as well as for those folks streaming on YouTube. Carol Masser, the market is pretty much where it was. I think the last time we spoke about an hour ago, pretty much green across the screen. Modest gains on the S&P and the Dow, stronger gains on the NASDAQ and the Russell.
Yeah, kind of a meh, I want to say. But it looks like we're going to finish at our best levels of the session here with, once again, Maddie, some outperformance among those tech names.
Some outperformance among the tech names, but I got to say we're seeing that energy sector still causing some of those declines, light declines that we're still seeing in the S&P 500 as we head towards the close, Scar.
Yeah, absolutely. And I just want to point out as well, the Russell 2000 really gets my attention, up more than 1% at the moment. We were just talking with Quincy Crosby of LPL, and she was saying this is the group that's going to lead you out of the downturn. This is the group that will have the leadership when the downturn eventually gets here, and we can look past it. Of course, we don't know when that downturn will actually get here because the economy seems to be doing just fine.
Yeah.
We should point out here, when we talk about the broader market, volume does still remain below some of the longer term as well as intermediate term averages. And I am curious as to why we didn't maybe see a little bit more activity given that deluge of economic data that we got this week.
What do you mean? Activity to the downside or what?
No, activity. So activity can be up or down, Carol.
Okay,
just checking. Movement.
You know.
We got some movement on the
stocks
Treasury.
can go up, they can go down.
We got some activity on the Treasury side, I will say, and yields.
All right, we're going to E equals MC squared. We're going to explain physics to Carol Masser after we get to the closing bells here in New York here. And it does look like most of these gains are going to hold into the close here. 34,000 and change right now on the Dow Jones Industrial Average. That's up about 41 points from where we were yesterday, up about a tenth of a percent. The S&P 500 higher by 12 points or 0.3%. The NASDAQ Composite higher by 0.9% or 110 points. Meanwhile, the Russell 2000 is going to finish the day roughly up by about 21 points or 1.1% here on the day, Carol.
All right, Romaine, so some small movements, especially if you look at the S&P 500 here, as you just broke it down. But if I look inside the index, you've got most names actually posting some gains today, more than 331 actually to be exact, Scarlett, 170 to the downside, 2 unchanged.
And we did manage to close, like you said, near our session highs. But when you look at the industry groups, it's really interesting. Even though this is a modest advance of 0.3%, most groups are in the green here. Auto companies up more than 2%, media entertainment also getting a 1.3% lift. But as Maddie had mentioned, energy stocks continue to be the laggards today, off by 1.8%.
That's okay. They've had 2 really, really, really healthy years.
Good point.
And we just had a guest who said he still likes energy. All right, let's get to some of the individual gainers in today's session. Airbnb, a standout by a mile, top of the NASDAQ 100, holding on to most of its gains of the day, so finishing with more than a 13% rise in today's session. We broke the earnings late last night. Shares surging the most, I think, since roughly 2021, but forgive me if I haven't confirmed that. The company's sales outlook beating analyst estimates. They talked about robust travel demand following a record year in 2022. Keep in mind, our Emily Chang catching up with the CEO in just about an hour on radio and TV, so they'll dig a little bit deeper into the business.
And just real quickly, that close today, that actually puts it back, I think, biggest one-day gain, going back to 2020, late 2020.
Oh, okay, so even more. Yeah, so significant, huge move there.
Absolutely, yeah.
Generac Holdings up about 8%, a little bit off its highs of the session, but it was among the top in the S&P 500. The generator company posting fourth quarter profit that topped estimates. They also provided some year guidance. It's on a tear this year, up more than 30%. And then just wanted to get to Roblox because that one was just on a tear, up 26%, holding on to most of its game. The company reported fourth quarter bookings that beat. Analysts were positive, and they talked about those January bookings as a sign of strength, Romaine.
And I'll just add a couple. We should point out analog devices closing at a record high. GE at a 52-week high. Roku shares actually rose 12% in the cash session and appear to be extending some of those gains here in the after-hours session right now, up about 13% here. Earnings crossing the wire right now. I'm just going to get you straight to the main headline here, which I'm still trying to pull up. I'll forget my slowness here.
Looks like fourth quarter net revenue, $867.1 million. That's a big beat.
And thank you, Carol. And what I think is interesting, too, we're looking at that net revenue figure, but I also thought it was interesting, too, that when we talk about the EPS numbers and the idea that people were looking for some semblance of profitability here at the expense, with the idea, though, that they would also need that growth to back it up. And you are getting that growth. We should point out that on a revenue basis, this is only maybe less than 1% growth here, but I think a lot of people had expected a lot worse. R&D expenses also coming in pretty high, up about 75% year over year at about $220 million. Those are the two main headlines we have right now.
Yeah, absolutely. But as you say, a lot of it has to do, Romaine, with expectations, right? I mean, and if people are feeling a little bit more negative or expectations are low, it's very easy. First quarter gross profit about $310 million. So we continue to see some more on Roku, still up about 16% here, guys, in the aftermarket.
You know, and point out that this was a stock that had dropped, what was it, like 80-something% last year?
Yeah. And in this kind of environment where everyone is fixated on top line growth, it's so fascinating that total net revenue grew 13% year over over year, and platform revenue increased 20%. Double-digit increases for a company in this kind of environment.
Before we move on, here are your EBITDA numbers on an adjusted basis, of course, because everyone adjusts. 110 million. Street was looking on average, guys, for 80.4. We should also point out gross profit coming in at 310 on that side here. So it looks like it beat pretty much across the board.
A beat pretty much across the board. And this comes as, you know, Roku is not the only company having amazing news today. We were also just talking about Airbnb just continuing to rip through the day following their earnings yesterday. So a lot of these companies really having good news in their earnings reports. I think we're about 75% of the way through the S&P 500 earnings cycle, Carol. Is that right?
Yeah, we're well through it. Absolutely. A lot of names that we've covered. And I think, you know, what's interesting, guys, and we see this repeatedly, it's really very much fundamentally based. What's the company's story? What were the expectations? What's the outlook that we hear from the company, Scarlett? It's not always just this broad-based either buy-in or sell-off. It's very specific.
There was a great note out. I think it was the folks over at JP Morgan that showed that dispersion of returns. The idea, kind of reiterating or backing up what you just said, Carol, the idea that this rally or whatever you want to call this has really been about individual names rather than a broader bet on the market as a whole.
So as much as we talk about macroeconomic themes dominating the market, for investors, it's all about picking bottoms-up stock picking and looking at those line-by-line items and looking at the strategy and trusting the executives in charge of mapping out a strategy in a difficult environment.
It's exactly like you said, Scarlett, in the quick take video that you did. It's about stock picking and not these active funds.
Oh, Maddie, thank you for the shout out.
Cisco crossing the wire right now. We're taking a look here at those fiscal 2Q numbers. Revenue coming in at $13.6 billion. The street was looking for $13.43 and adjusted EPS at 88 cents. That's the beat here. Here's your guidance going forward. I'm going to give you the full year first. Full year adjusted EPS 373 to 378. Their previous guidance was 351 to 3.5. So basically raising that guidance here. And as far as the revenue goes, looking on a full year basis, they're looking at growth on a percentage basis of 9 to 10.5%. The previous estimate was for a range of 4.5 to 6.5%. So raising their guidance, the street was looking, guys, on average for 5.7% here. So these actually look to be pretty good numbers here, at least on the headline.
The dividend numbers.
Yeah, go ahead.
No, it's the dividend, I think, that really gets my attention here. Cisco raising its dividend 2.6% to 39 cents a share. Again, Romaine, you and I were just talking about some tech names and dividends, right? Intel and how people are waiting for it to potentially cut its dividend. And here you have a situation where Cisco is boosting its dividend and it's being rewarded for that.
Interesting too. We talk, and obviously I think you're kind of slyly referring to Intel because there's been a lot of concern about them. But we talk about two companies, kind of, I guess, if you will, kind of old tech type of companies, if you will, that have really been trying to turn around. Obviously, Intel's struggling a lot more than Cisco. But I think when you see these numbers in Cisco, the cash flow numbers coming out of this, the Agile Networks revenue, which is coming in at $6.75 billion, and that services revenue at $3.4 million. Product revenue at 10.2. These are really good numbers across the board. And I think if you're an investor who is focused on cash and more importantly, return of that cash to you, you might like what you're seeing in this report.
This is like off the charts.
Yeah.
I mean, to see this third quarter revenue forecast of up 11 to 13% with the estimate 5.8%. This is a stock that hasn't moved much this year. It's only up about 1.7%. So you're seeing
double-digit growth. If they hit the top end for Cisco, 10.5%.
I know. It's like crazy. And, you know, I'm looking at the press release. Chuck Robbins, he says, with Cisco's strong second quarter performance, our fiscal 2023 is shaping up to be a great year. You want to know about IT spending, corporate IT, or corporate spending? They are spending. That's what this report shows us, Maddie.
And it tells us that spending on tech infrastructure is holding up better than anticipated, which again could be another indication that the spending is staying strong. This is what we've been talking about all day since those retail numbers came out. It feels like that is the story of the day. Spending is up.
Yeah, maybe the new way forward for technology, if you're looking for leadership, are the old school tech companies. They are the new growth. They're the new growthy part of the sector.
When was Pop Quiz, Carol? When was the last time Cisco posted double-digit revenue growth in a year?
I don't know. I have to look at the FA screen and check it out.
I'm looking at it right now.
What does it tell you? What does it tell you?
I'm looking at it right now. I'm all the way back to 2013, and I'm still in the single digits here. So I'll double check these numbers. But if they were, even if they got to the lower end of that range, that would end up being one of the better years on a revenue growth basis that they've posted in quite some time here. So this is a significant guidance that they're giving, assuming that they actually meet it.
And it's not like they said, well, 6 to 7%. They're saying 11 to 13%. That is, you know, what, double what the street, for the most part, is expecting. All right, guys, we're definitely seeing that stock pop in the after hours, something we'll probably talk about in no Thursday trade. That's a wrap, everybody. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. Beyond the Bell, we call it, and we will see you again, same time, same place tomorrow. Stock continues to be up about 7% in the aftermarket. Lucky for us, we can continue the analysis because with us is Bloomberg Intelligence Senior Technology Analyst Woo Jin Ho with us here in our studio. Wow. Tell us about the quarter and what jumps out for you.
You know, fantastic numbers all across the board, right? And
yeah.
And look, Cisco is par for the course for what I've seen in the rest of networking. We saw Arista Networks beat and raise last week, as well as Juniper Networks raise their 2023 guidance because demand for networking gear has been resilient, and Cisco is proving that to be the case.
When you talk about networking gear, tell us what that means for a company.
So
and what it runs for so many different
Sure.
companies.
So think about it as the plumbing. Of a company, right? Anything that will drive a lot of the data in and out of a company or an internet provider.
It's a good thing we're not data dependent.
Exactly.
No,
well, I mean, well, let's
No,
let's think of it this way, right? When our kids are at home and the internet is down, that's the first thing the kids go after,
Sure.
right? So it's clear right now that people or corporates are investing on the infrastructure side of the business, especially on the networking side.
It's critical, right?
Yeah,
But
totally.
The cloud space is so crowded. What is it that's making Cisco just have these incredible numbers and stay unique?
So they have exposure to the cloud, but 50% of the business is to corporate networks, much like in Bloomberg, right?
Yep.
And one of the things that's been driving the infrastructure sales has been work from home, and
Which was a worry. We were worried, right? What it might mean.
exactly
Right.
right. We were worried
we
that
came back
we
to
need
work.
there's still 3-4 days in
Where people
work,
are-
one a day at home. So you have to re-architect the infrastructure, and that means new network connections, which is driving all of these infrastructure sales for Cisco.
So that's what's going longer term is that companies are having to deal with, people are back at work. We got to deal with those networks, right, at the
Right.
office. But we've also still got a huge workforce that are at home.
Now, keep in mind, the key to Cisco's numbers is also as well as the networking numbers in general. The supply chain was a complete bottleneck to sales last year, right? The whole networking space missed 2022 because of the supply chain.
Right.
Now the supply situation is getting better, which is leading to the beat and raises that we're seeing today.
Is that then something you want to know on the call? How much of what we're seeing is this backlog of orders? Is that what it is?
Well, keep in mind, when they ended last quarter, they had 2 to 3 times their normalized backlog. Backlog is still going to be fairly high, and Chuck said last quarter that it's still going to be roughly around the same time at the end of fiscal 23 as it did at the end of fiscal 2022. So backlog, they're still eating through the backlog, which is leading to the beat. Now the question is going to be, and the analysts are going to be all over this, is how much of this is backlog driven?
That's what I'm
versus
thinking. Right.
And how are the order cancellations been? Have the orders stood up? Now, if I'm sure Chuck is going to tread a very fine line in terms of the orders argument versus the backlog argument.
Right.
But I hopefully he'll say backlog will still be at 2 to 3 times. Now, when we look at, they'll announce the order numbers on the call. Expect orders to be down because the comps are just way too high.
From where we were.
From where we were, right?
Okay.
Last quarter was 14%, negative 14%. It's still going to be negative for the next several quarters.
How do you suss out the answer to that question then about the backlogs? What is your question that you ask or the first step you take on the terminal to figure that out?
Well, it's not going to be on the terminal per se. It's just going to be body language on the earnings call from Chuck, from the CEO, right? And if he says that backlog has come down more than we had anticipated, that means that carried the quarter and the outlook. But
on the press release, the CFO, Scott Herron, is saying we are raising our full-year outlook driven by our growing recurring revenue base and RPO.
Yes.
Along with our healthy backlog and the steps we have taken to improve supply, we have once again increased our dividend, reflecting the strength of our cash flow generation and our commitment to shareholder returns. What's RPO?
So that is recurring purchase orders.
Okay. So does that give you any more clarity?
Yeah. So RPO has actually been it's a part of the change in the business model that we've been talking for quite some time now. Now, the RPO product, taking a glance, the product RPO was up 7% on a year-on-year basis. So that actually lines up well with what's going on with the business model, and it actually helps the business model change. I'm not too concerned about the 2023 guidance increase, right? It reflects third quarter, the second half of this year, right? The comps in the second half were easy to begin with.
Yeah.
I'm more concerned about fiscal 2024. Does that momentum continue? At BI,
because he feels pretty confident about 2023.
They all are.
Yeah.
Right. All the networking guys are feeling very, very good in 2023. BI has a stance that they're going to sustain that growth into 5 to 6%, which is their long-term growth rate. Consensus is at 3 to 4%.
Okay.
Right. So if consensus brings up their 24 estimates and 25 estimates to 4 to 5%, that means they're starting to buy into the business model change that Cisco has been talking about for quite some time now.
Do you expect them, though, to start giving you kind of a longer-term outlook, or no, not at this point? Do you think on the call he's going to say, okay, I know we've given you a lot of clarity on 2023. Do you think he'll talk much about 2024?
Too early to talk about fiscal 2024 until the next analyst day, which is I don't know when.
Okay.
Okay, so you say that Cisco is also going to maintain a healthy cash flow heading into the year, right? How are they doing that?
Well, look, it's all going to be sales-driven.
Yeah.
They have low to mid 30% operating margin, right? So look, they are a cash machine, and they're going to continue to be a cash machine. Roughly what, $15 billion in free cash flow on a year basis, low capex.
You can do that with the dividend then.
Exactly. I'm not too worried about their dividends.
Stock's still up about 7%. You know, it's funny because it really hasn't moved much this year. I think it was up about 2%. You know, so far. Why was that? Why wasn't it participating in some of the optimism that we saw in the tech space overall?
So the networking space in general has underperformed in the first quarter of in the first couple of months of this year because they outperformed in the fourth quarter of last year because they beat everybody else in tech. So, you know, they outperformed, and now they were going to lag. Now Cisco is starting to deliver on the numbers.
Were you surprised at all by just how good these numbers are today, or you anticipated it?
I thought they were going to bring it to the top end of the 6.5% guidance. The strength of the second half is pretty surprising to me.
Well, it was funny because we were on with Romain, and you know, he's like, "When was the last time you saw these numbers in terms of the third quarter revenue outlook?" I'm like, "I got to go to the FA page," and he's like, "He had to go back to 2020."
He said like 2020, yeah,
or 2020. Like it's been a long time since we've seen them.
It's been a while.
Is it possible that they will even beat them?
Good question.
Beat the
revenue outlook?
The new revenue outlook?
Yeah.
Too soon to say. And if there is going to be a further inch up or closer to the top end of the new guidance, it's going to be more supply driven than anything else.
Who should we keep an eye on? If Cisco's going up, I'm looking at Juniper in the after hours. Is it Juniper? Who would you look at?
Look, Juniper and Arista both reported. The one company that
Juniper's not moving after us.
Yeah, I mean, possibly HPE, Hewlett Packard Enterprise, but they're more server and storage gear than networking. But there is that networking business, but there's very little read across the rest of the space. The main comps have already reported.
All right, so number one question to Robbins and his team on the call is about the backlog.
It's going to be sustaining the backlog, yes.
All right, really great analysis, so smart, and thank you so much for doing it so quickly because we know you're busy and have to go back and write a report. Woo Jin Ho, he's Senior Technology Analyst at Bloomberg Intelligence. Crack on when it comes to Cisco. Joining us here in our Interactive Brokers studio. Shares of Cisco, Maddie, continuing to rally in the aftermarket. We're up about 6% here, and a lot of it has to do with what it had to say about that third quarter revenue growth. They're looking for up 11 to 13%. The estimate of the street was a gain of 5.8%. That's a big gap.
Huge gap, and it tells us a lot about where tech spending is going, and it's going to be a huge stock to watch.
Yeah, absolutely, into that Thursday trade. All right, Carol Masser, Madison Mills, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. An update on Wall Street. We begin, though, with a developing story. Headline from the Bloomberg Professional Service: in the gold sector, in the mining sector, Newcrest has rejected Newmont's all-share takeover offer. That's the headline. We'll have more details as they become available. Earnings front and center right now. Moments ago, we heard from Cisco Systems. We were just talking about it right here on Bloomberg Business Week. Cisco, of course, the biggest maker of machines that run computer networks and the internet. It delivered an upbeat revenue prediction for the current period. Shares after hours up by just about 7%. Zillow also reporting revenue that beat estimates as apartment owners joined real estate agents in advertising on the company's sites and apps. Shares after hours of Zillow up by about 7%. Shopify reporting fourth quarter sales that beat analyst expectations. After hours, Shopify trading lower by 3%. As I mentioned, an update on Wall Street today. Yes, January retail sales jumped by the most in nearly 2 years as investors sifted through that data. That resulted in a choppy session, but into the close, the Dow, the S&P, NASDAQ, and the Russell 2000 all advanced today. Russell 2000, by the way, up by 1.1%. S&P up 11, up by 0.3%. The Dow up 38 points, up 0.1%. NASDAQ up 110 points, a gain there of 0.9%. 10-year yield 3.80% now, with the 2-year 4.62%. Spot gold down $17 the ounce to $18.36, down by 0.9%. West Texas Intermediate crude down 0.7, 78.52 a barrel. Cannot ignore Bitcoin today, surging 8.5%, 24,137 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, great market and earnings recap. Charlie, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized businesses may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more at getrefunds.com. Well, you know what, Maddie? We had some data out earlier this morning. We talked about with Scarlett and Romaine. It talked specifically about output at U.S. factories, up the most in January by the largest amount in nearly a year. So we're talking about improving supply chains, firmer demand, getting and giving some relief, if you will, to what's been a really challenged manufacturing sector.
Some much needed relief after the past couple of years of supply chain shocks, right?
It's been crazy, right? We're just talking a little bit about Cisco and the manufacturing and the backlogs just in general. We want to get to our next guest because Mativ Holdings is a publicly held company. It's got about a $1.5 billion market cap. It makes and sells specialty materials for manufacturing to customers in more than 100 countries, so it's got a great global perspective. Julie Schertell is the president and CEO of the company, just ringing the closing bell at the New York Stock Exchange, and that's where we find her via Zoom. Julie, good to have you here on Bloomberg Business Week on Bloomberg Radio. First of all, tell us a little bit about your customers, your business, and what vantage point that gives you when it comes to manufacturing and the economic outlook.
Sure. Thank you for having me today. It's a real honor and privilege to be here at the New York Stock Exchange, and it marks a key milestone for Mativ as a specialty materials company. We're created through the merger of two former specialty materials companies, Neenah and SWM. And so combined, it's a really powerful statement that we're making into the market. We have complementary technologies that we sell into a diverse area of different categories, whether that's filtration media for cleaner air and water and the strong macro trends behind those things. It's release liners and applications for medical packaging, and it's tapes and abrasives into the industrial space as well. We've seen great strength in really a supply chain that is starting to improve, and that's a great spot to be in as a manufacturer.
How would you describe the overall manufacturing environment today, and what does that tell us about our overall economy? What's kind of an insight that you have because of your work in manufacturing that the rest of us might not?
I think it's interesting because it's a little bit of a dichotomy. We are seeing, the supply chain start to right size after what I would say is 2 years of challenges in our supply chain and in manufacturing, whether that's driven by the rising interest rates, record levels of inflation, the Ukraine war, some of the conflicts in China, or some of the outcomes of the COVID in China, we're starting to see that settle in. And so our supply chain is opening up a bit, loosening up a bit, and that's really important for our customers. It means we're able to get back to a service level and predictability and lead time that is most valuable to them. And I think what we've really recognized as manufacturers is it's important to have a global supply chain, but it's really important to have local supply, because during this time, supply and availability became the #1 priority for all of our customers.
Hey, Julie, 2 questions. So are you back? Are the supply chains back to where we were pre-pandemic and all of the bottlenecks? And secondly, you talk about local supply chains. Are we seeing more and more companies tap into that, change their supply chains, make sure that they're kind of in their backyard? So if you could address those 2 things, that would be great.
Sure. On the supply chain, I'd say we're headed back to pre-pandemic levels, but still not there. But we're seeing, chemical availability become more standardized. We're seeing lead times become more standardized. So the availability is really improving. We aren't seeing a tremendous amount of deflation yet, at least not in the categories in which we compete. We're seeing it start to moderate, but we still have prices at very high levels for most of our supplies. And I will tell you that where in the past maybe pricing was the #1 discussion with customers, it is supply chain now. And so just as I was mentioning to your question, that local availability, and there's different ways to do that, whether that's having manufacturing assets in the backyard of our customers in our markets, or having availability through different means of transportation and quick turn, an agile type of transportation system. It's significantly important because many customers and many suppliers and many manufacturers have learned how impactful it is when some of those materials that we did not anticipate. You anticipate your big commodity materials to have fluctuations like we've seen. We did not anticipate specialty chemicals and some of the other areas to have the type of volatility that we've seen. That's starting to loosen up and straighten out a little bit, but the local supply chain, the reliability, the predictability continues to grow in importance with our customers.
Have you felt any impact from China reopening? Has that impacted you at all? And do you anticipate it impacting you?
Very minimal. We have a very small footprint in China and a very small portion of our revenue in China. We're primarily North American and European, and a little bit in South America, a little bit in Asia. So it's had a very minimal impact, I'd say, not significant.
All right, so the U.S. and Europe are your biggest markets. Recession for either of them, or how would you describe it at this point, Julie?
I think they're very different. I mean, we're definitely feeling some contraction in Europe in particular. We saw and felt and experienced the record level energy hikes. We have facilities in France and Spain, the UK and Germany, and we felt it in all of those areas. I will tell you what it's helped us do is become more agile. So we've worked really hard to start and forward buy some of those energies, hedge some of that energy cost so that we have greater reliability and predictability. And it's made us very agile with our pricing, so that we have shorter pricing commitments and contracts and different modifiers that are inclusive of different components in some of those specialty chemicals and energy that had not been in the past. So that's Europe, and I'd say Europe is where we're feeling, more of a slowdown. It's a little bit hard right now to peel away how much of that is really pure demand contraction and how much of that is just customers right-sizing their inventory, because we know throughout the entire supply chain there was significant inventory build. As customers struggled to get the materials they needed, they ordered more and more in anticipation of getting their fair share, and as demand starts to correct itself, they're often left with high levels of inventory. So there's a level of destocking, and we're feeling that in North America and Europe, but more contraction in Europe. I'd say our North American business has remained fairly healthy.
I'm looking at, there's a great function on the Bloomberg terminal. It's all about supply chains, and basically it looks at who are your top suppliers and then who are your top customers. But when it comes to your suppliers, a lot of it is in the energy space. How would you describe that industry right now?
The energy space, I think they're just going through a tremendous amount of change, and I think it's difficult to predict the future right now. There's a lot of pressure from getting to clean energy, and then there's the availability and some of the the efforts that we're seeing or the impacts that we're seeing in Europe with the Ukraine war, and that created some of the issues that we saw earlier this year. So for us, it's really been about how do we control our own destiny, knowing there's lack of predictability in the marketplace, and particularly in energy. How do we make sure we become more agile, we become more consistent, and we really take control of those factors that we can to push forward through some of those issues and reduce the volatility?
And are you still seeing consumer demand for sustainable manufacturing, even with some of the volatility that we're experiencing?
Yeah, absolutely. I think sustainable manufacturing it's not a trend. I think it's here to stay. And so it's really important that we continue to move in that direction. And much of our platform from an innovation standpoint is on sustainability. We're often the preferred alternative to plastics for some of our packaging material and medical packaging material. So it's a really important part of how we move forward.
Hey, Julie, 20 seconds. What keeps you up at night? What's the biggest risk in the outlook? Very quickly, if you could.
It's just the overall global economy. The factors are moving and the indicators are moving in different directions. When we look at interest rates versus job rates versus manufacturing PMI, typically they've moved in unison, and they just are not quite doing that right now. So it's the lack of predictability. That's why for us, it's really important we focus on those things we can control. We just merged. We have great synergies. We have great scale. We have great cost reduction opportunities, as well as unlocking growth. So I'm thrilled with where we're headed, and we're going to focus on those things that we can control.
Well, great to get a check on your business and talk outlook as well. Julie Shurtell, she is president and CEO of Mativ. She just rang the closing bell at the New York Stock Exchange, and that is exactly where we were just talking to her. So good to catch up with her. Let's get a check on world and national news. Back to DC and Nancy Lyons. Hey, Nance.
Thanks, Carol. Actress Raquel Welch is dead at the age of 82. Her family says she died this morning after a brief illness. Known as a Hollywood sex symbol, she talked about growing old during an interview with ABC's The View back in 2007.
It really isn't about an age. It's about your attitude and about your passion for life. And, my attitude about myself and my life has changed so much since I was a young girl.
Welch is known for her roles in Fantastic Voyage and 1 Million Years BC. The 19-year-old man who went on a shooting rampage at the Top supermarket in Buffalo, New York, has been sentenced to life in prison without parole. The judge handed down the same sentence, life without parole, for the domestic terrorism charges and for the 10 counts for first-degree murder. After the sentencing, the Erie County DA John Flynn promised the community the killer will never live as a free man again.
He will spend, no matter what, the rest of his life behind bars. Never eligible for parole, never eligible for probation, never eligible for anything except viewing bars behind them for the rest of his life.
Again, DA John Flynn, the convicted murderer, also faces federal charges which do carry the possibility of a death sentence. Kansas City is celebrating in a big way today with a parade for the Super Bowl champs, the Kansas City Chiefs. They beat the Philadelphia Eagles after being down 10 at halftime. Quarterback Patrick Mahomes addressed any doubters in the crowd.
Before we started this season, the AFC West said we were rebuilding. I'm going to be honest with you, I don't know what rebuilding means. In our rebuilding year, we're world champs.
Mahomes was the MVP of the game. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Lots of earnings after the bell. Cisco Systems, that is the biggest maker of machines that run corporate networks and the internet. It was out with an upbeat revenue prediction for the current period. After hours, we have got Cisco up now by just about 7%. Zillow Group reported revenue that beat estimates as apartment owners joined real estate agents in advertising on the company's website and apps. After hours, Zillow up by just about 3%. American International Group's fourth quarter profit dropped from a year earlier as a decline in investment returns ate into improved underwriting results. Turned out to be an up day on Wall Street today. We had the Dow, the S&P, and NASDAQ all gaining. Indeed, a lot of the gains coming in the final few minutes of trading. S&P up 11, up 0.3%. The Dow today up 38, a gain of 0.1%. NASDAQ up 110, higher by 0.9%. The 10-year yield 3.79%, with the 2-year yielding 4.62%. Investors were picking through another batch of solid economic data, specifically retail sales. So how might this all play out for the economy? Samir Saman is Senior Global Market Strategist at Wells Fargo Investment Institute, and he was our guest right here on Bloomberg Business Week.
Our base case calls for a recession, calls for 2% inflation. Now, again, it could be that takes a little bit longer than we initially anticipated, but unfortunately, it probably still ends the same way, which is with growth underperforming and those value areas kind of leading us out in the next bull market.
And again, after hours recapping, we do have Cisco up by just about 7.2%. Airbnb surged 13.3%. Coming up shortly right here on Bloomberg, we will be hearing from CEO Brian Chesky. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, looking forward to that interview. All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Masser, along with Maddie Mills, here in our Bloomberg Interactive Brokers studio. All right, do want to get to our next guest because, first of all, just to set the stage a little bit, Maddie, a recent incredible deep dive by our Bloomberg Equality and Wealth team, it looked into what it called the slowest moving financial crisis of our time, and that was how public finances are buckling as retirement promises made to previous generations collide with the realities of an aging population. Basically, we're getting older, we're living longer in a lot of ways. Like, how do you kind of maintain your retirement and maybe also, live in a nice way going forward?
Yeah, it's scary, and it's a reminder of the importance of saving early and often. Right?
It sounds like our parents are in their ears. All right, so let's get with us because we have a great guest who's got some thoughts on that. Joining us from Charlotte, North Carolina via Zoom, attorney, entrepreneur, and author Scarlett Cochran. She's got a new book out. It's called It's Not About the Money, A Proven Path to Building Wealth and Living the Rich Life That You Deserve. And great to have you here with us, Scarlett. I've got to say that I've read that this book is described as it's a book about money, but it's not really about the money. So explain that.
Because it's not about the money, because it's about the life that's possible when you create when you make financial decisions that align with that life. So like you just mentioned, wanting to know that you have enough money set aside to not just retire, but also to maintain the quality of life that you want to have in retirement, that's what it's about.
It's so important, and I feel like I know you're on TikTok, Scarlett. I am a little bit of a TikTok addict, and I feel like there's a lot of wealth advice on TikTok that's not always the best. A lot of just affirm that you're going to be wealthy someday. How does your book differ from that kind of, I don't want to say woo-woo advice, but just a little bit more ethereal? Tell me about how your advice is a little bit more actionable.
So first of all, let's not knock the woo, because it's important that we have that vision for what we want our lives to look like, especially people like me who come from really humble beginnings and want to really create that American dream. And we have to be able to dream and feel a little woo to do that. However, just the dreaming, that's the beginning. But then you have to actually take action. And to take action, that requires knowledge and empowering yourself to understand how finances actually work. And for example, in the book, I teach a very concrete concept called the minimum investing rate. So that's knowing how much money you need to be investing, not just saving, but investing every single month in order to retire when you want to and have the kind of lifestyle that you want to have in retirement. So it's not just dreaming about the ideal retirement, but getting really practical and tangible with the how.
Well, I've got to say, Scarlett, and I've got family members have done these financial vision boards, right? And just kind of check them off, whether it's college education, whether it's a beach house or a new car or whatever, and kind of helping to keep them focused. But it does seem like sometimes it's tough to invest and then also kind of live. So how do you get your head around that? What's your advice on that?
My advice is to start where you are. So meet yourself where you are and do what you can, but you also have that long-term goal in mind and you can work towards that over time. So for me, when I graduated from law school, I went into public interest. I was a banking and finance attorney. I was making $60,000 a year, but I made the decision, the commitment that I needed to start investing. So I started investing $50 a paycheck. And 10 years later, that $50 turned into over $500,000 in my nest egg. And that's the power of compounding, but also slowly increasing the amount that I was investing over time.
And you also talk a lot about the importance of knowing your numbers, Scarlett, which I thought was really critical. Can you talk about why that is so important and what that looks like in practice?
Well, we all have a tendency to do what I call mental money math, where we think that our finances look a certain way and we think that we spend a certain way, but we don't actually know. And when you know your numbers, you know how much you're bringing in, how much you're paying in taxes for insurance, how much you're actually investing, then you can make sure that you're really on track to hit all of your savings and investing and life goals. Like you mentioned, we are in this slow, silent savings crisis. And the reason is because people don't know what the number is that they're trying to hit. And so they don't realize that they're falling off track until it's frankly a bit late.
I have to say, Scarlett, Maddie and I were just talking kind of off air before we got going, and that whole idea of if you start jotting down what you're spending, that's when you're kind of blown away, because it's so easy, especially living in a city, right, Maddie, like New York City, like money just kind of flies off out of your pocket.
Yeah, there's the joke that you can't leave your house in New York City without spending $100.
Right,
and
exactly.
Yeah, it just gets eaten up.
All right, Scarlett, just got about a minute or so left here. So what's one or two pieces of advice if somebody wants to get started on this?
Well, first of all, grab the book. It's a comprehensive system taking you from how you think about money to dreaming big to really tactical advice to how to manage your finance on a day-to-day basis. But number two, I would just give yourself a little grace, right? Beating yourself up and feeling shame, that doesn't make us want to do anything. That doesn't motivate us at all. So I want you to forgive yourself for the financial decisions that you've made in the past and just trust that you have your best interests at heart, and then you're going to make better financial decisions moving forward.
All right, yeah, and you're going to make mistakes at times, but that doesn't mean you don't lose focus, basically. Scarlett, thank you so much. She is an attorney, an entrepreneur, also author. Scarlett Cochran, joining us there from North Carolina. Her new book, that is out. It's not about the money, a proven path to building wealth and living the rich life that you deserve. All right, folks, in just a moment, we are going to hear from the head of Airbnb. That company, we've talked about it a lot, rallying more than 13% in today's session. That came after the company about 24 hours ago reported an outlook that showed robust travel demand, and that certainly caught the attention of investors. Right now, though, our Emily Chang getting ready to sit down with the chairman, CEO of Airbnb. We're talking about Brian Chesky. Let's head over in a simulcast radio and TV to Emily Chang.
Welcome to our Bloomberg TV, radio, and YouTube audiences. I'm Emily Chang. No sign of a recession when it comes to travel on Airbnb, at least. The company reported its first full year of profitability ever, with nights and experiences booked now 16% higher than they were pre-pandemic. Shares closing up 13% today. Airbnb CEO Brian Chesky joins me now. Brian, thank you for taking the time to join us as always. So look, travel's robust, But let's talk about the color. Are you seeing signs of people making trade-offs? 10 days turns into 7 days, $100 a night turns into 75.
You know, it's funny, Emily. We are not seeing any measurable slowdown. What we said in our Q1 outlook is we are expecting pretty steady growth. Now, we are expecting a little bit more accelerated growth in short-term stays, but that's more of a recovery. We're seeing more recovery short-term stays. We're seeing more people go to cities, and we're seeing more people cross borders. Between urban and cross-border, that was around 80% of our nights booked before the pandemic. So it's really more a matter of a recovery of the old ways of traveling and a real sustainability of the new ways, like including people staying longer and traveling to more places.
Dave Stevenson, your CFO, said yesterday on the call, this is growth mode now, not necessarily profit maximization mode.
Totally.
What does growth mode actually look like?
Well, you know what? There's something kind of interesting that I've learned in Silicon Valley. I think there's this really simple way of thinking you're either in growth mode or profitability mode. And what I've learned since the pandemic is as we've gotten more profitable, we also got more efficient. And as we got more efficient, we got more focused, we were able to grow faster. So we're going to continue to do both. But we are focused on 3 priorities this year. Number 1, we want to perfect the core service. We want people to love Airbnb, and that means loving every detail about it. So we basically did the storyboard of the end-to-end experience for guests and hosts, and we are listening out all the different things that people want to be better Airbnb, and we're trying to systematically fix them one at a time. Once we do that, then we need to make sure we have enough hosts. If people are watching on TV, they probably have traveled to Airbnb or know someone who has. I want people to say the same thing about hosting. They know somebody who's a host because it's so mainstream and so popular. And along the way, we're actually laying the foundation for us to extend beyond our core business. And we're thinking about pretty expansive and big ideas. So that's what we mean by growth mode, that we are perfecting the core, making hosting mainstream, and we're thinking about big ideas beyond the core business. But the cool thing is that we can stay really lean, really disciplined, because I don't think growth and profitability have to be a major trade-off. And I hope that's what the lesson of Airbnb is, that you can do
Okay,
both.
so what are the big ideas beyond the core business? Because, obviously you made some hard choices during the pandemic to pull back on some of those.
Well, I'll just share a couple small things, but I mean, I gotta have a hook to get me back on the show. So I'm gonna hold something back. But let me just say that twice a year, around May and November, we do these releases, the summer and winter release. We've got a pretty big idea for May, but I'm gonna hold that back. I gotta have me back on the show. But we are thinking about investing a little bit more in experiences, and I'm really, really excited for that opportunity. Longer term stays, we think is a really continual opportunity for us. So we think those are really interesting. We also think that there's some really great services for guests and hosts that we think they're going to really like, and there might even be some things people want to pay for. So these are some of the initial ideas we have, but a lot of the big exciting things I'm going to have to come back on to tell you about.
All right, TBD. So long-term stays, you mentioned 21% of gross nights booked. Has that plateaued? Do you think that's max at this point?
I honestly, let's think about from a first principle standpoint, why does that business even exist in the first place? That business exists because there's a gap between people traveling on a short-term basis and people signing one-year leases. And that gap has increased as more people have gotten flexible. Not everyone works remotely or has flexible work policies, but a lot more people than before the pandemic. We're seeing a lot more people want to travel for summer. We're seeing a lot more people relocating. We're seeing a lot more people that are kind of living different places month to month. I think this is a very long-term trend. I think there was an initial adoption that was unique in its vertical nature during the pandemic. I think it is normalizing, but over the course of 10 years, that's going to keep going up because people are going to continue to get more flexible.
Still, you've got inflation, layoffs happening almost everywhere but Airbnb. And I wonder if this catches up. What are you worried about when you see a tough few years ahead for the global economy?
Well, I certainly worry about, our hosts. I mean, a lot of them live at or below median income, and Airbnb is an incredibly important way for them to make money. And I think Airbnb can be a way for more people to become a host. As far as our employees, though, we did make some hard choices, but here's a stat. we have 5% fewer employees than before the pandemic, and we have 75% more revenue. So we are extremely disciplined, very focused, we're very lean, and I think we're pretty insulated from a reduction in force standpoint. And we are really lean, we're really focused. And, we basically made a lot of hard decisions, and then we never left that discipline. And it was partly because we knew we were living in a time of uncertainty, but it's also because we knew that as we got more disciplined and lean, it actually became a better experience to work here. It was easier to get work done. It was easier to innovate. So I think that, we're ready for whatever storm is ahead.
Let's talk about the storm. You've got $14 billion in cash amassed. How are you thinking about what to do with that? Is that just a massive rainy day recession fund?
Well, I hope it's more than that. We are absolutely going to be looking at growth opportunities to invest in. But one of the lessons I learned from before the pandemic is I remember I had a teacher who said, Brian, you can do everything you want in your life, just not at the same time. And so I want us to be incredibly rigorous, thinking one step in front of the other. But we are absolutely looking at expanding our market, going to some new opportunities. So where there's a good opportunity, we will invest. But we're going to continue to be extremely disciplined. And, expect us to generate a lot more free cash flow this year as well.
All right, we're going to have you back to talk about new opportunities and big ideas. You've got me curious. Brian Chesky, Airbnb CEO, thank you so much for taking the time. Guys, I'll send it back to you.
Thank you very much, Ellen.
All right. Of course, Emily Chang of Bloomberg Radio and Bloomberg TV there with the CEO of Airbnb, Brian Chesky. TBD, it sounds like he's teeing up his future interview there with Emily. Bloomberg Business Week, it is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. See if your business is eligible for employee retention credit assistance with the team at Innovation Refunds. They help make the process easier and less stressful so you can focus on your business. Learn more at getrefunds.com. And I'm just thinking, going back to Airbnb and Emily's conversation, I mean, Airbnb, Maddie, up 13%, biggest gain since December of 2020. And he was very upbeat, but the company came out, 24 hours ago and talked about robust travel demand, and that certainly has given a kick to the share price.
Yeah, and I'm so interested in how bullish he is on these midterm travelers. He talked about how there's this gap that Airbnb is filling between like these short-term weekend travelers and people looking to sign a one-year lease. He said he sees it as a trend that's going to keep extending over 10 years, and Airbnb is really the only one filling that midterm leasing space.
Yeah, well, you were talking about people, right? That's where they're maybe like they rent out for a long period of time rather than an extended stay hotel.
Yeah.
They'll do it through Airbnb.